With Bitcoin reaching a new all-time high, if you've ever bought crypto in the UK, you probably have the nagging question in the back of your mind. When do I actually pay tax on this? I know it can feel a little confusing, and when I first started out, I was genuinely worried about getting a surprise bill from the HMRC. So today, I am going to share a simple two-part framework that I now use to make it all make sense. I am Adil, and in this channel, we share practical lessons to help you build a better tomorrow. Wilson and I are just two guys figuring things out. And hey, if it works for us, who knows, maybe it just might work for you too. Did you know that the HMRC does not see crypto as money? They see it as property. But wait, if they see it as property, what does that mean tax wise? Well, I'm going to break that down. But quickly, this is not financial advice, this is just an educational guide based on our own personal research. For your personal tax advice, speak to a regulated advisor or a professional. Okay, part 1. This is the tax that applies to a vast majority of people. It's called capital gains tax and it's the tax you pay on the profit you make when you get rid of an asset. In HMRC's language, getting rid of an asset is called a disposal event. So what counts as a disposal? Well, there are four main ones that a beginner needs to know. But the second one catches most people out. Selling your crypto for cash. Swapping one crypto for another. For example, if you swap Bitcoin for Ethereum, this is a disposal of your Bitcoin. You do not have to cash it out to a bank to create a taxable event. Spending your crypto on goods and services. Gifting your crypto to someone who isn't your spouse. So how do you work out the tax? Well, let's use a simple example. Meet Ben. Ben buys £1,000 worth of Bitcoin. A year later, its value has gone up. Then he swaps it out for £2,500 worth of Ethereum. This is a disposal of your Bitcoin. The calculation is simple. The profit minus the cost price. Ben made a £2,500 profit. The actual cost he spent on buying the Bitcoins was £1,000. So his gain or net profit was about £1,500. This is the amount that might be taxable. Now the good news is that you don't necessarily have to pay tax on that £1,500. Every person in the UK has a tax-free allowance called the annual exempt amount. For the year 2025-26, it's £3,000. Since Ben's gain of £1,500 was less than the annual allowance amount of £3,000, he pays zero tax on it. But what if you earn crypto like a salary? Well, this isn't part of your profits and is considered as part of your income and is eligible for income tax. Well, the main examples are getting paid by an employer in crypto mining or professional level trading, and the most common one for beginners, receiving rewards from things like staking. When you receive crypto this way, its value in pounds is treated as income, just like any other job. You get money for. So we have tax on profits and we have tax on crypto earnings. But what is the single most important thing you need to do right now as a beginner? It's not about complex strategies, it's about keeping good records. HMRC puts the responsibility on you to track every single transaction. For every buy, sell, swap, or reward, you should record the date, the amount, the type of transaction, and its value in pounds at that time. Some crypto platforms do it for you, or a simple spreadsheet is a great place to start. I know this can feel a lot to remember, but it's a great way to start off on the right foot. If this video helped clear things up, subscribing to the channel is a huge help for us. Thank you for watching and I'll see you in the next one.